In this video, we're going to look at how you can use SIF's adjustment tool to make it easier to forecast for the employee tax in your entity. This is possible for most regions, but where you have several months to pay the tax authorities, this can become a bit more complicated and require more manual input on SIF's forecast. But let's go and show you how we could calculate it. So in this case, we have salaries and wages of 15,000. And so we need to go and calculate what the employee tax on this is. So to start, we're going to go and add an advanced adjustment for PAYE expense or whatever it's called in your region. We're going to do this for the whole forecasting period. And it would be every month. And we're going to choose a formula. We're then going to link this employee tax to salaries and wages. So I'm going to go and look for the expense, salaries and wages. And I'm then going to multiply this by whatever the tax rate is in your country. So 0.2. A limitation here is if you have several employees that have different tax rates, then our best suggestion is to create a separate salaries and wages account per tax bracket and go and calculate your PAYE or employee tax on that basis. So in principle, you take the wages, times them by the tax bracket that's relevant to them, and then you can click save. And now SIFT will have calculated the employee tax on the salaries and wages. So that's the one part of the adjustment. The other part is to calculate how much we owe the tax authority, and this is obviously going to accumulate each month. So until we pay the tax authority, it's going to be accumulating each month. So we're going to do several formulas here. So the first thing we're going to do is go calculate our PAYE payable. So we're going to calculate this for the entire forecasted period. And in this case, the balance will roll every single month. So I'm then going to choose a formula, and I'm going to say that my PAYE balance would be my prior PAYE. So we're going to go PAYE payable, the prior one, plus whatever my PAYE expense in the current period is. And that means that now my payable is going to increase each month. But obviously, at some point, we need to pay this. So this next adjustment would depend on the rules within your tax region. So I'm going to add an advanced adjustment. I'm going to adjust PAYE payable. And I'm going to give a description, repay payable. I'm going to put it for the whole forecasted period again. But in this case, I'm not going to make it every month. I'm going to make it each 2 months. And that's because perhaps I'm going to pay my PAYE every second month. You might have this every fourth or third month. It would really depend. So this each second month, you need to go and consider how often are you going to be paying your tax authority. We're then going to select a formula. And now we have to calculate how much we're going to pay the tax authority. So we're going to pay them however much we owe them in the previous period. So I'm going to say prior PAYE payable. So that would be the last PAYE payable. Now I need to go and calculate how much my PAYE payable will be after this payment has been made. So it's going to be whatever last period's PAYE payable was, plus the PAYE expense in the current period, because that will just give you your balance of the PAYE in the current period. But then we've gone and paid last period's PAYE. So we're going to go minus the PAYE payable for the previous period. So in effect, we're recalculating what we think the closing balance of the PAYE payable should be. And because of the nature of the adjustment, to do that, we need to go prior PAYE payable plus the PAYE expense in that period to get to the closing PAYE payable before we've made any payments. And then we go record the payment. And in this case, we're paying everything we owed in the previous period. We can then click save. And now we'll see that our PAYE payable, it increases and then it decreases. And it does that throughout. So if we look here, you'll see there's this very wavy graph where every second month we pay it. Now, obviously, the second adjustment is going to be very dependent on the rules within your tax region. But this is just an example to get you thinking about how you can use SIFT's adjustments to go and account for these more unusual adjustments. So I hope that you find this helpful.